Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, 13th of August, Tuesday. Today we got PPI data and it was, as expected, quite soft. In terms of core PPI, we got 0% on the month over month, coming from the 0.3, and we were expecting a little bit of downtick. And year over year, we got 2.4%, coming down from 3%, and we were expecting a little bit of a downtick also. So we are improving the forecast with 2.4% on the core PPI, which is the more important, and also PPI headline month over month 0.1, less than the consensus, and PPI overall, year over year, 2.2%, approaching the 2% of the Fed, coming from 2.7, and we were expecting 2.3. So pretty good readings overall, and that sparked the market. In terms of interest rates, we are bouncing between 25 basis points and 50 basis points of interest rate cut in September. We are bouncing between those two, and honestly, I think the markets are getting ahead of themselves. I don't think the Fed is going to cut 50 basis points, but who knows? There's still a lot of August and a lot of news to come, so let's wait and see. But the rest is still the same. The second cut in November and the third cut in December. So 3 rate cuts that will push small caps more probably to the upside. And today is just one of those days in which we got the news. Here, this was the London Open, big push, big correction, and then we got the news and we pushed higher as expected. It's not a good day in terms of price action. As you can see in the 1 minute chart, it's super choppy, wicky, and overall quite concerning. But I got my setup right at the open, right at the data. This was the range for the PPI candle, and that left a big fair value gap that got tapped several times in this zone. But at this zone, I don't want to be the first one. I prefer a orderly pullback and then try to buy the fair value gap as near as possible of the 45 EMA. This was a beautiful setup that also took this sell side liquidity down here. So pretty good setup, still 45 points of risk for 95, because I was just targeting the range that I've been talking about since we left in here. Since we left here, I've been talking about the range in between 18,900s and 19,400s. This was the range that I want to be reclaimed, and that was my target, and it coincides with the 10% from all-time highs. So honestly, quite a decent target. As you can see, we got a big rejection just when we tapped, but then buyers still buying. Look at this open. This was the open. Now we are opening up, but we are slowly grinding. And if you are following this channel, you already know that I hate the grind days. I prefer a beautiful trend day following the 45 EMA, but I don't like this choppy price action, this wicky price action, because I've seen a lot of times in things like this. If, for example, Israel throws a missile to Iran and we start the war, we are going to see this. We are so fragile up here that I don't want to continue trading. I got my almost 100 points, and that's more than enough. Every single part of the market is green. Apple 1.633, Nvidia 5%, Meta 2%, Tesla 3%, all the banks except Charles Schwab, that I don't know why, but all the banks are quite in the green, and also small caps are trying to push higher. On the daily, we can see that they are still feeling the pain, and on the RSP, we can still see a little bit of weakness. Today, we are in the red in terms of indicators for the percentage of stocks above the 200, above the 50, and above the 20. So there's some concerns deep in the market. We are now pushing higher like crazy, and the IWM, the Russell is 3%, the Nasdaq is 3%. There are some parts on the overall markets that are not following up. So this is just a big push of tech, because obviously we are putting a big, nice candle. But this, I think this is continuation from the recovery and the freak out that we took part last week. So if we analyze the 1 hour, we can see that we are back again into this range. I can see this market right now, we are at 19,000. I can see this market still pushing to this liquidity up here. This liquidity comes from the consolidation on the 1st of August, in the middle of the big sell-off. So this consolidation, this zone, it's pretty damn dangerous. Don't be naive and don't overstay your welcome. This market is slowly grinding and it's slowly cooking shorts. But you don't want to be the one buying this zone. I would prefer another setup. For example, let me just clean this a bit and remove what I used for the trade. So as you can see, we cleared this liquidity at the start of the fair value gap on the 30-minute that we got here on the 1st of August, but we have the previous consolidation during the morning in that day. So this 30-minute and this 1 hour, I'm going to leave this here because I would like to see a bounce of that, or a bounce of 80, 85, that is the 10%, because if we move this target, we are now entering a zone of discount. Let me just put this in perspective. This is from high to lows, the range. There's a Fibonacci right here and right here. We are now entering the 50% discount at this zone, and we are approaching the point of control. So if you were long down here, you are pretty good. But if you are trying to look for positions at this level, at 19,000 psychological levels, in which we have liquidity up here, we have the previous point of control from all-time highs, we have the range point of control, we have a lot of business up here. I mean, there are a lot of shorts quite near here. So I don't feel that you should be going long here. This is just FOMO kicking in, I understand, but I usually, when I try to find positions in this kind of market, it's either a pullback or I don't get in. Because more times than not, I've just bought the highs and I have to go through a lot of drawdown in the pullback and then maybe out, break even, or things like that. We all went through that. We all know that this market, it's doing something really nice. That is getting you out of the market. This is not an easy price action, so you really have to be patient for the pullback. And if not today, I will wait for it tomorrow. I already got my piece of profit and I will just patiently wait. I see this 30-minute right here that was respected. And on the 1 hour, let me check, there's also a fair value gap. So we are in the middle of this consolidation. I mean, there's a lot of imbalances here. There's a lot of business that only went up. The auction only went up. We are most probably going to clear some kind of business up here. Let's see where. But as you know, we are just melting shorts. We are melting and melting and melting. You don't want to buy here. Let me say it again. Please manage your risk, because right now this price action is not solid. It's just a grind, and most probably this is just people trying to short the top. So for now and until tomorrow, I would like to see a close. We have a lot of structure here that I would like to lean on for a future trade this week, and that's my setup. That's the way you trade this market long term. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, support the channel by subscribing, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Discipline, patience, and risk management are key for your success. Stay safe, everyone, and see you tomorrow.